Welcome back to another episode of the Indy Investor Pod. This is Indy Investors talking Indy investing, and we have the show to share any tips, tricks, and knowledge of Indianapolis investing. And today I'm super excited to have our guest on. We've got an OG in Dustin Ruhl, and he's going to have a lot of different things to share with us. So with that, let's get on with today's episode. Hey, welcome back to another episode of the Indy Investor Pod. Today we've got Dustin Ruhl. And I'm really excited to have him on because he's someone that I've kind of known when I first got into real estate, if he knows this or not, but his name's kind of known around Indianapolis, and he's kind of a jack of all trades, but I'm excited to have him share his journey and everything he's been working on throughout his career. So Dustin, man, how you doing?
I'm good. Thanks for having me.
Yeah, no problem.
I mean, I think we've talked on the phone a few times, and obviously we've exchanged thousands of emails, but
yeah,
I think I was pleasantly surprised when you asked me to join. I was excited to do this. So thanks.
Yeah, I think you'd be a great guest just because, you are doing a lot, and I know you kind of have your hand in all different kinds of buckets, but yeah, it's funny because I call you the OG because, when I first got into real estate in 2013, there was only a handful of people that I knew in the investing side. And fast forward to 2020, you're still here, and you're doing a lot of things. So I just would love to dive into some stuff. But just a quick intro of yourself. Why don't you go ahead and just tell us when you got into real estate or just investing in general here in the Indy market, and then we can kind of dive into your different businesses and so on.
Yeah. So I'm an old banker. I started in banking, consumer finance, mortgages, and right out of college with Wells Fargo in 2004. So, I kind of got the background got a good rundown and got the experience of just working in finance for about 10 years. And then 2011 was actually my first dive into real estate. I remember I tell a story because in 2011, it was just obviously right after, about 3 years after 2008, and the market was still down and you could still buy stuff really, really, really cheap. And first house I ever bought, I was freaking out. It was in 2011. I was a first time investor, and, I was still in banking. And I was like, if I'm ever going to do anything for myself, I got to start now, because I can't just keep sitting in here being a transactional fool for the rest of my life. I got to start building some wealth somehow. And so I took a deep dive into real estate, bought my first deal. I was freaking out. I thought I was going to bankrupt my family. And, the first time first time investor worries about, you just think of the worst, right? And so I bought my first little condo, and so it went really well. I held it for about 3 years, put in a nice renter, and it went really well. And so, I laugh about that because now I think this year we'll buy a couple hundred homes. And so I go from freaking out about one house, and now I just, now it's a lot different. So
it's funny how that happens.
I know. So I got in 2011, was my first purchase. And then I left banking, went and worked for a gentleman. He kind of built like a turnkey type of business locally. He was a client of mine at the bank. And so I would see him every once in a while. And so we talk, and next thing you know, I'm being recruited to come over to help him raise money and onboard new investors to buy turnkey in Indianapolis. I didn't know anything about it. I just knew I wanted to get into real estate, and I was pretty decent at sales. So I was like, man, this is a good, his background has been in real estate, and he was a young guy. And, and you look as a banker, you look at his accounts, and you're like, man, he's got $1 million or so in there. And you're like, geez, I want to be this guy. I don't want to be sitting here, behind the desk, taking deposit accounts. I want to talk to this guy and get to know him and get to know the business. So I left. Okay. And, I had a pretty good salary at the bank. And so I jump in with him. I get a $24,000 salary. He's like, it's $24K. This is what I'll pay you. Go sell. I'm like, all right, well, I'll just go talk to everybody I know. So I went and started talking to everybody I knew. And, I ended up actually, like, all the people that I knew that were in banking or whatever, like, it started to become really good conversations. Everybody's really interested in real estate, and they just don't know how to get into it. They don't know what to do. So the turnkey model was really nice for them. They were, professionals, doctors, dentists, attorneys, business owners. And so we started talking, and next thing you know, like, I got a pipeline of investors wanting to invest locally. I'm like, man, okay. So, so eventually, about a year later, I found myself extremely involved in the company. I was involved. I was learning how to scale, how to rehab homes in bulk. I was learning how to buy homes, 10, 15 homes a month. I was learning just the ins and outs of the business as much as I could without really being an owner. I was just I was a head of sales. So,
Yeah.
But, so I did that for about 3 years. And then the owner happened to get into some legal issues. And I was like, I just don't want to be a part of this. So I left and went back to banking for a year. And I got into banking. I was like, man, I know why I left. I kept doing my own personal real estate building while I was in banking. And in 2015, I got out completely and invested in, bought a franchise from Homevestors, and that we buy ugly house people. Mm-hmm. And I just knew at that time, if I was going to scale this thing, I just couldn't rely on the MLS to buy homes.
Right.
So I was like, wholesale is the deal. So, so I bought a franchise and started building my turnkey business back up. And so I was using the wholesale side to fund my turnkey side. And then somehow, some way, I figured out how to wholesale homes. And at the same time, I was turnkeying houses. And so for the last 5 years, I've, been doing a heavy transactional, model. And then over the last 5 years, I've kind of vertically integrated construction and property management and some other business ventures that we can get into. But so yeah, man, I mean, long story short, over the last 10 years is really when so when you and I, 2013, when you first started, I was only a couple of years into it. So yeah. I was still relatively new as well. So yeah.
That's great. That's a good story. So I know you kind of gave me a heads up of everything that you've either done or are doing right now within real estate. So you mentioned wholesale, turnkey, fix and flip. You do some construction, you buy your own portfolio. You're starting your own property management arm of it. So out of those things, are you still actively doing all of those, or do you still do the wholesale and turnkey, right?
Mm-hmm.
Obviously you still fix and flip because we did some deals together. The construction company. So you have a different construction arm within.
Yep.
Okay.
Yep. So our turnkey business, and so just to kind of, in 2021, our goal is to do 100 turnkey deals in 2021. In fact, our stretch goal is to do 240, so 20 a month for turnkey. Because now that we got the vertically, and we got property management in house, it's easy just to onboard. And so the faster we can buy, rehab, and sell, the faster we can build that property management company. And so, and I really like that too, because we're doing everything in house. So all these homes that are fully renovated, by us, so we know what we're getting, as opposed to trying to go out and, sell other investors to bring their portfolios over. Most, 95% of our acquisitions will be from stuff that we turnkey. So that's our stretch goal. The construction side of it, I got a partner in that, and he runs the whole construction side. So we get a house. We've hired a couple people. We got another superintendent, and then we have another superintendent. Actually, my dad. He's retiring this year as an engineer, and so he's going to be bored out of his mind. And he's very, very talented with construction. He's a jack of all trades, handyman and engineer. And so my mom begged me to hire him, so I did. So no, he's really good, and we're happy to have him. And so he's going to help on the construction side. So we're going to need all the help we can get if we're going to do that many rehabs this next year. So the construction company is just part of the vertical integration. And then, because of all that with the property management, we really accelerated our buy and hold portfolio as well. So, yeah, I mean, so 2021, I think our acquisitions between the wholesale and the turnkey, we're really going to be working hard. So,
yeah. And then you also mentioned, you're starting something new. You're developing, some custom homes, right? In Fishers.
Yeah. So that's, for me, that's more of that's a passive deal for me, but I'm heavily involved in it. We bought some land in Fishers, about 13 acres. And so we're developing it into 13 lots. And we're going to do some on-site new build custom home. I got a partner in that who's a builder. And so right now we're developing it. It's a long process. I don't know that I'll ever do it again. It's a long process. It's long. Now, something that's long. You hope that the return on the end is heavy, but you don't know until you sell the first lot. And so,
yeah,
we're finishing that up, and hopefully first quarter we'll be putting lots under contract. So good time to be doing that right now. But we'll see. So.
Yeah. So hearing about all of those things that you've done and are doing, and, looking at your numbers, and, I know you're successful, compared to a lot of people in all those areas. Like, how do you go about going all those different strategies and staying focused on kind of like growing each area? Because I find it hard to, do like focus on 2 areas of real estate investing and then putting a third one in there and then putting one on the back burner. Like, how do you have the team in place to make sure each area is kind of excelling and meeting your expectations?
Yeah, I mean, so from a team standpoint, I have, you guys know this, you guys work with virtual assistants on your team. So we have a couple virtual assistants that really help with the back end of, we're starting in 2021, we're officially going to be not using Homevestors anymore, and we're going to be doing our own marketing. So I spent this whole year really beta testing. You guys that do your own marketing and been doing it for a long time. I highly respect what you guys do, because it's Homevestors does everything for you,
right?
But you pay a price. And so what I've found, and that I'm going to save a lot of money by, even though Homevestors has helped me build a profitable wholesale business. It's just not, I'm at a point now, because we buy so many homes outside the Homevestor system. We can't, it's too expensive to use them. So I spent the last year building our own marketing channel, and it's hard. It's really hard. So that's taken a toll on me for this year. But I've been able to do that because we have people on the team and that have assisted making sure, the assembly line is still moving. So we have two virtual assistants that kind of run our, we use Podio CRM system. And so they run that and make sure all the leads are coming in and they're being worked and they're being dished out appropriately. We got 4 acquisitions people. We got 1 person that works in Fort Wayne. So we're doing some Fort Wayne stuff. We've just gone into Evansville. That's the one thing that I really liked about leaving Homevestors is I can go into some other markets with our marketing and not have to pay a franchise fee. I can go wherever I want to market, which has been nice. So we just launched Evansville fourth quarter, and so we're doing some stuff there. Still getting to know that market. So I got 4 acquisitions people and then 3 people that buy homes here in Indy. So that's helped on the buy side. And then I have a director of operations who runs the whole business. And so she runs all the transactions. She works with all of our turnkey buyers to make sure they have a good experience. And so she's very, very, very busy. And then I have Butch, our dispositions manager. So he also helps me buy homes too on the front end. So he's heavily involved on that piece of the business. And then outside of that, I've got partners in the other businesses. So they run in the businesses, which is helpful, which allows me to focus on I love to buy houses. I mean, I'm a deal junkie, And that is where I'm best suited at. And everybody knows it. And so, but because of that, and because of my banking background, I know how to get capital and use leverage to, scale and buy a lot of homes. So everybody knows I'm on the team. And so they try to build around me to make sure that, that's my sweet spot. And I stay in that sweet spot. This year's been tough because I've been trying to implement the new marketing side. So that's taken a lot, like I said. So, but we're finally at the end of the finish line, and we've kind of hit our stretch goal. We want to be doing our own thing in January, which we are finally. So, yeah, man, I mean, I got a team of 10 people, and so they help run it all. And it's, yeah, you're writing checks to pay everybody, but it's well worth it, man. You can't grow if you don't do it. You can't.
Yeah.
You can't.
Yeah, I just know that's just a hard thing for people to kind of overcome, is getting to that point of hiring the right people and letting them kind of run the show, and you stand back and just focus on what you like to do. So it sounds like you've got that in check. So there's two areas I kind of wanted to dive a little deeper. I think a lot of listeners of the show will get some value out of. Let's talk about your turnkey business. Like who's your target client? Kind of what areas of Indy are you providing them properties for? Let's talk more about that.
So we focus in central Indiana. Okay. So it's not like we picked a certain area of town. Let's be honest, all of central Indiana is blowing up right now. I mean, everywhere you buy, you can, our goal is to get a 1% price to rent ratio. So if you get $1,000 in rent, you can buy a turnkey home for $100,000. Those homes can be are fully inspected, they're fully rehabbed, and they're fully appraised. And so nobody closes on the property until all that is done. So there's checks and balances. Everybody's happy. There's a tenant in place. So everything's checked. So I don't really, some people want to buy a $70,000 home. That's what they want. They want a high D, low C class, and they want to load up on those properties. And so they buy a bunch of them, and they just, and if it's well managed and you have a property manager that doesn't mind going into those parts of towns and are fine, and they do well, those properties you can make money on. You really can. They just have to be appropriate. They have to be managed appropriately. And so we don't have a problem going anywhere. We'll do turnkey deals up to we'll do turnkey properties up to $300,000. The numbers just have to work. And so with the rents where they're at, we don't shy away from any part of town. We've done some turnkey deals up in Thorntown, which is northwest of Lebanon. Right. So it's great. We're doing turnkey deals in Alexandria, and they're great little markets. They really are. They rent fast, and we do turnkey deals in Shelbyville and Greenfield, and so it's not just Indianapolis where we focus. We just go where the deals are. So,
and how many turnkey homes have you provided to people? Do you have a number on that?
Well, so in the last 10 years, being a part of probably 600-700 homes. Okay. In the last 10 years, whether it was my business or I was working for somebody else. In the last 5 years, when it's actually been my business, is probably 300-400 homes. But again, in the last 2 years, because we brought property management in house, it's now a focus of ours. So we'll beef that up, and like I said, we'll do 100 next year. Our stretch goal is to do 20 a month. So it's just all a matter of, available capital and available properties. Those are the two things. Other than that, we have the ability and the people to do it. It's just getting the properties and the capital to do it. So yeah, I mean, it's really, once you set the system in place, it really just moves. So you guys know that. I mean, right. It sounds like a lot of moving pieces, and it is, but when you break it all out, between the different business lines, everybody just stays in their lane, you can get it done. So.
Okay. Yeah. And then your personal portfolio, you said you're up to about 100 units on your personal buy and hold.
Yeah. So we, this year we bought a sizable package, which helped. And, And so we were able to raise some money to get the package done. And it's our first big, we bought 62 units, and they're all around Indianapolis, Butler, Tarkington, East Riverside, West Side, some East Side. And so we were able to take that down with some private money. And right now we're going through the refinance process with a local credit union. And we should have that done by the end of January. So that'll be our first really large acquisition. And I had about 35 homes before that. So after all it's said and done, we'll have by the end of January this year, we'll have 100 homes in the portfolio personally. So so that was a big win for us this year. So if you want to scale and you want to get rentals, it's hard to do it buying one at a time, but if you can buy
60,
if you can buy 60, then you can get there. So
yeah.
And banks like the asset. They really do. And so if there's anything that your listeners take away from this is like, banks like the asset. They're starting to get used to it because they're seeing it now. Wall Street's in it. They've been in it for 10 years now. So it's a big thing. And so you can get really cheap debt on it too. And so if you're experienced and you have your financials in line, you can get good debt, real good debt on it now. You don't just have to go try to find a 30 unit 30 unit building to scale. You can do it in single family.
Yeah.
And you can get debt on it. So it's a great time right now to buy homes and hold them. It really is.
Yeah. So I'm just always curious, if you're buying a 60 property package, like how long, like what's your due diligence like that on? Like, is it, how long does that take? What are you looking at all of them? What's that look like?
Well, yes. I mean, it's an in and out process. They're all occupied. Well, 5 or 6 of them weren't occupied. They were professionally managed, so that helped. So yeah, we went through. It was 50 units. It was 50 actual properties, and there's duplexes in there for a total of 62. So
okay.
We went and looked at 50 of the properties, went through 62 of the units. And yeah, I mean, we got it done in 30 days, believe it or not. The longest part was getting the capital. So
Gotcha.
Once we had the capital tied up and the negotiations done, the diligence started right away. And I think we started the process in June and we finished in first of August. So 60 days.
Oh, so that's not too bad. Yeah.
No, that's not bad at
plus
all.
Being in town and being local probably made it a lot easier.
Yeah. Yeah. So the refinance process has been taxing. That's been taxing.
Yeah.
That takes time. Yeah, so
for sure.
But as long as you got the front end money lined up and your investors know that, hey, this is going to be a 6-month process. Our goal is to have you taken out in 6 months and all that, then everything's fine. It's just, you're just not going to get it done overnight. It takes time and it's worth it though. If it gets done, it's worth it. And then obviously the nice piece for us is if for some reason we, can't get a home financed or it just doesn't fit within the bank's box, we can just turn around, fix it up and sell it turnkey. So
yeah, that's having different exit strategies is key, man.
Yeah. That's been helpful for us. Just having different exit strategies and different business lines that we work in has helped keep us kind of afloat here as we started making some changes that I talked about earlier. So it's been nice. It's recession proof in my opinion. When you have a number of exit strategies, it keeps you in the game even when the market shifts. It really does.
Yeah. And then kind of moving into that, you started a property management company. You mentioned you're almost up to 200 units. So what's your plan with that? Like, what do you see for the future? Because I know if with Indianapolis being a good buy and hold market overall, for people finding a good property manager is definitely key because everyone's always going to be buying rental properties here. Like what's your vision with your new venture here and kind of where do you see it going?
Our goal is to have 1,000 units under management in 5 years. That's our goal. Okay. And so the one thing that I've learned and watched as the last 10 years, I honestly, a year ago, I would, hey, you want to do private management? No. That was you couldn't even get the question out before I was saying no. Now that all changed, that's changed because I got a, really smart business partner that's running it. And he wanted it because he's similar to me, and he's a young guy, and he actually was an investor client of mine, a church buddy of mine. He's a client of mine, and we got to know each other fairly well. And next thing you know, a year later, he's like, dude, let's do property management. I said, that's fine, and I'll bring you properties, but I'm going to be involved. But as far as building it, you're going to have to do that. And he's done a phenomenal job. So that's been helpful with the maintenance side of it all. We have the construction, so that's been helpful. But so the one thing that I saw, the reason why it's scary to launch is once you get 100 properties, that's 100 properties, 150 properties is easy to manage with 1 or 2 people. But if you really want to make money in the PM, you've got to get 500 plus properties. And to do that, you got to have people. And that's the hardest part in the PM, is to get quality people. And a lot of PMs overstaff, and then they end up just burying themselves because they're not making any money. And so we're trying to use systems, technology, and really like talented people, overpay them almost, and just, be able to run a really, just sophisticated model without having to have 15 people working for you. So we try to use virtual assistants. We try to, hire really solid, what we call an asset manager. And they're going to manage 200 properties. That's it. So one person with a team, one person will have a maintenance department, but one person manages 200 properties. And they're not going to manage any more than that. So they're an asset manager. They have 200 properties assigned to them. They manage their clients, the owners of the properties. And then once we get 200 property, once we're ready to go on to the next 200, we hire somebody else. And then we hire somebody else. So we'll have 5 asset managers when we have 1,000 properties. And so I feel like from a scalable standpoint, if we have the right technology, the right systems in place, and the right people, we can manage that appropriately and not overwhelm people. Overwhelm our tenants, overwhelm our owners, and then overwhelm the people working in the business. Because it's a taxing business. It really is. It really can be. But if you do it right, it can be very profitable and rewarding too. So.
Yeah, I always thought people who wanted to take on property management was a different breed.
Well, it's turned into a necessary evil for us, because it's like, you ask
it makes
me
sense
how
for
many
you.
turnkey,
Mm-hmm.
Yeah, you've asked me how many turnkey properties have I done. I've done a lot, and that means I've helped build a number of property managers in town. And unfortunately, I've had some property managers in town that have let me down too, because they don't know how to manage property. So at this point, it's like, guys, we've got to bring it in house, and we've really got to take care of our clients. We just do. So yeah.
Well, that's awesome. Well, good luck with that new venture. Excited to see you grow it there. Kind of the last part here, as we're kind of getting towards the end of the show. Obviously you've done a lot. So you started a lot of different companies. How do you keep focused, rolling with you said, you mentioned you're good at rolling with the good and the bad, because there's always going to be positives and, ups and downs in this business, kind of with all these ventures and businesses you have going on. When you do have those dips in business, or how do you keep moving forward?
That's a great question, man. You gotta have people around you. Obviously inside your business, but outside your business that you can go talk to. And if you think you can run this business on your own and white knuckle the whole thing, you're gonna fail pretty quick. And so to have, Indianapolis has, some awesome business people within our business. They do, like Brett, Brian, Will over at New Paradox, Steve over at Redev, Indy, Ben, Manships. There's a lot of people in town that just are running awesome businesses. And so, when you have issues, growth issues, those guys you can rely on tremendously. And, I had lunch with Will on Friday, and I tell you, like, it was and he used to be a business partner of mine. Two years ago, we helped built New Paradox together, and we decided to move on from that. He wanted to, I wanted to do more turnkey. He wanted to hold more properties. It just didn't work for us, and that was fine. It was easy, it was handleable, it all worked. So, we both now have our own great businesses, and it's been fine. And so we still get together all the time and we talk, and he's like, dude, like, you're at a point now with where your businesses are, you have to look at hiring a CEO level person. I'm at that point now.
Yeah.
And I'm like, I know, man, I know. And so it's that accountability. It's like, dude, I'm gonna hold you accountable to this till February. Like, you have 60 days to figure this out. Because he's like, you're a detriment to your business right now. And he's right. And, and you need people to kind of say that to you, even though you think you're doing good. And it's like, no, you're good right now until you're not. And so, and it's too late after you're not. So, yeah, I mean, it's, if you're trying to continue to grow and build, you've got to be open to being critiqued, and, you got to be open to, giving praise where praise is due as well to your employees, because they're busting their butts every day.
Yeah.
And so, I sat down yesterday, with my director of operations, and I just plain out asked her, I said, what do you like to do right now? What do you hate to do? And it was, with COVID and everything, it was like, man, it's been so long that since we've actually had that type of conversation.
Yeah.
I'm like, I'm sorry. Like, this was a great, powerful conversation, because we talked about organization and where does she need help with. And it was a really just a nice conversation that we hadn't had for a long time, because everybody's been coming and going,
Mm-hmm.
So now we're starting to try to get back in the office and come together as teams and meetings and stuff. So it's kind of getting back to business as usual. And it's been great. So you just forget about that stuff sometimes, especially this year. Everybody's just going in different directions and home with kids, and it's been a tough year for that. So.
Yeah. Same with me. I mean, what helps me best is just reconnecting with, like you said, the other people around the city doing the same thing, have the same big visions in mind, and just have conversations with them. It's like a mini mastermind ongoing. So
There's not a lot of cities in the country that have this. I really don't think
there really isn't.
There isn't.
Yeah. So that's awesome.
You can either use it or you don't. So I don't know. I mean, it's there to be, and everybody's open to having conversations. Everybody is.
Mm-hmm.
And nobody's trying to hold stuff to their chest. And there's more than enough. One thing I learned early on, there's more than enough real estate to buy in one market. You can't buy it all.
Exactly.
So
yeah,
you can't. So
I've always seen that the people who kind of try to hold to themselves don't last too long. So
no, they don't. So
yeah,
but that's okay.
Yeah, for sure. So is there anything else? Anything else? Any other last words you want to share with us?
No, man. I just think 2021 is going to be a good year for everybody. I really do. I think I think there's I think there's going to be a lot of opportunity in 2021, and I hope everybody's ready. I think I'm sure you guys are. We are, and I'm excited. I'm excited to finally move out of 2020 and move into 2021. And it's going to be fun. I think it's going to be a fun year for a lot of people, and I think there'll be a lot of good properties that are going to come available, and and I think sky's the limit. It really is. So
yeah, no, I agree. Yep. Awesome. Well, I know we packed up a lot of information in this. We could have probably made this into 2 or 3 episodes with all the stuff that you could probably talk about. But Dustin, I really appreciate you for coming on. I'm really excited to see your growth, and we love working with you. So keep up the good work. And with that, everyone, we'll see you on the next episode.